Before we can even ask, how high can HBAR go? We need to understand where it's been. And trust me, the journey of Hedera Hashgraph has been anything but ordinary. When most people think about crypto, they think about blockchains, Bitcoin, Ethereum, Solana, maybe even Stellar or Ripple. But Hedera isn't technically a blockchain at all. It's a hash graph. Different design, different philosophy, and honestly, a very different approach to adoption. That's part of what makes this conversation about BAR's future so fascinating. Hedera was launched back in 2018 with a bold promise: to deliver the speed, fairness, and security of blockchain, but without the bottlenecks that slowed down networks like Ethereum. Instead of blocks lined up in a chain, Hedera's hashgraph consensus lets transactions run in parallel, reaching finality in seconds with fees that stay predictable and ultra-low. We're talking fractions of a cent, fixed. No gas fee roulette like Ethereum. For enterprises and developers, that stability has always been a huge selling point. But Hedera didn't just want to be fast. It wanted to be trusted. That's why from the start, they built the governing council model. Instead of one company or a few whales pulling the strings, Hedera handed decision-making power to a council of global giants: Google, IBM, Boeing, Standard Bank, Ubisoft, Dell, and more. Today, that council has over 30 members spanning tech, finance, and enterprise. Each of them runs a node, each of them votes on decisions, and none of them can dominate the network. For an industry where decentralization is often a marketing buzzword, Hedera went for a very corporate but very real version of it. Now, let's talk price, because let's be honest, that's what a lot of people care about when they ask, how high can HBAR go? The token launched around the 2019 bear market and, like most projects, it had a rough start. But in the 2021 bull run, HBAR found its moment. It surged past 50 cents at its peak, driven by hype around enterprise adoption, NFT launches, and the broader crypto mania. But here's where Hedera's story diverges from the pump and dump cycle we see so often in crypto. After the hype cooled, Hedera didn't disappear. It didn't collapse into irrelevance. In fact, it quietly kept building. New governing council members signed on. Real-world pilots in supply chain, carbon credits, and tokenization started to emerge. And by 2023 to 2024, while many Ethereum killers were struggling with outages or fading interest, Hedera was still there, steady, growing, and gaining more credibility. Fast forward to 2025, and that's why the question, how high can HBAR go, feels different this time. We're not just talking about speculative pumps or retail hype. We're talking about whether Hedera's long game, the enterprise, compliance-first, sustainability-friendly strategy, is finally paying off. Think about it. In the last 2 years, tokenization has gone from a buzzword to a real trend. BlackRock and Franklin Templeton are tokenizing funds. Banks are exploring digital assets. Governments are experimenting with CBDCs. And guess what? They all want infrastructure that's fast, cheap, green, and regulator-friendly. Hedera checks all those boxes. That's why you're starting to hear more chatter about HBAR in analyst reports, in crypto Twitter debates, in YouTube breakdowns like this. It's no longer just that weird hashgraph thing. It's becoming a legitimate contender in the Web3 infrastructure race. But the journey hasn't been smooth. Hedera's critics argue that it's too corporate, too centralized in spirit, even if the council is diverse. They say the focus on enterprises has left retail investors feeling left out, compared to ecosystems like Solana that are buzzing with grassroots projects. And, of course, BAR's price action hasn't always matched the narrative. For every person who sees a future $5 or $10 token, there's another who says, it'll never break $1 again. And that's the tension that makes this discussion so engaging. Because Hedera sits at the crossroads of hype and fundamentals. On one hand, it's got the backing of major companies, real adoption stories, and unique tech. On the other hand, it's still fighting for market share in an industry dominated by Ethereum's network effects and Bitcoin's narrative dominance. So, as we stand here in 2025, the question isn't just, how high can HBAR go? It's really, what forces are at play that could push it higher or hold it back? That's what we're going to unpack. We'll look at what analysts are saying, what traders believe, what builders are betting on, and how all these perspectives fit into the bigger picture. Because here's the truth. Markets are driven by stories as much as numbers. And the story of Hedera Hashgraph is still being written. Whether you're holding HBAR, building on Hedera, or just curious about where this space is going, understanding that journey is the key to seeing where it might go next. If you want to understand where HBAR might go, you have to look under the hood, because Hedera's fundamentals are what set it apart in a crowded crypto landscape. First, the technology. Unlike Bitcoin or Ethereum, Hedera doesn't run on a blockchain. Instead, it uses Hashgraph consensus, a different way of recording and validating transactions. Without getting too technical, this design lets Hedera achieve some crazy performance metrics. Transactions finalize in seconds, throughput can reach over 10,000 TPS, and fees are fixed at around $0.0001. That predictability is a big deal for enterprises, where cost spikes can kill adoption. And here's another kicker. Hedera is built to be energy efficient. Studies show it uses a fraction of the energy that blockchains like Bitcoin or Ethereum consume, which aligns perfectly with the world's growing demand for green, sustainable tech. Second, the governance model. Instead of a foundation or a small dev team running the show, Hedera has its governing council, a group of global corporations, universities, and institutions that each operate a node and vote on network decisions. We're talking Google, IBM, Dell, Standard Bank, Ubisoft, Deutsche Telekom, and more. Each member gets equal voting rights, and no one can hold more than 2 consecutive terms. The idea here is stability. By spreading power across trusted names, Hedera avoids both whale dominance and chaotic community governance fights. Critics say it feels too corporate, but supporters argue this model is exactly what makes enterprises comfortable building on it. Third, adoption. This is where Hedera's long game starts to shine. While other networks chase NFT hype or DeFi speculation, Hedera has been quietly powering real-world use cases. Examples? Tokenizing carbon credits for sustainability markets. Tracking supply chains for companies that need transparency. Enabling micropayments and decentralized identity solutions. Even major banks and asset managers have piloted tokenization projects on Hedera, taking advantage of its low fees and compliance-friendly architecture. And because Hedera's smart contracts are EVM compatible, developers can bring over existing Ethereum projects without starting from scratch. So when you stack these fundamentals together, fast and cheap tech, stable governance, and enterprise adoption, you start to see the unique position Hedera occupies. It's not trying to be the people's chain like Solana, and it's not trying to out-DeFi Ethereum. Instead, it's carving out a lane as the trusted enterprise-grade network for tokenization, payments, and sustainability. And that's why analysts are watching HBAR so closely. Because if tokenization truly is the next trillion-dollar wave, from real estate to bonds to carbon credits, Hedera isn't just in the conversation. It might actually be one of the most prepared platforms to scale it. When it comes to BAR's price, the speculation is as much about psychology as it is about fundamentals. Analysts, influencers, and retail investors all bring their own lens to the conversation, and if you look across the landscape, 3 big themes emerge: conservative institutional forecasts, bullish long-term believers, and hype-driven short-term traders. Let's unpack each of these to see where the consensus and the outliers really are. The conservative institutional view. Large research firms and institutional analysts tend to keep their forecasts grounded. They're looking at adoption metrics, on-chain activity, and token unlock schedules. For example, some Wall Street-style analysis puts BAR's fair value in the 15 cents to 25 cents range for the near term, based on the idea that enterprise adoption is still relatively small compared to crypto-native projects. They argue Hedera has excellent technology but hasn't yet hit the kind of network effects that would justify a rapid surge. These same analysts also note that BAR's tokenomics can be a headwind. The max supply of 50 billion tokens is significantly larger than Bitcoin's or Ethereum's, and while Hedera has a structured release schedule, unlocks still introduce sell pressure. That's why conservative predictions generally see 50 cents as an ambitious ceiling for 2025 to 2026, unless adoption or partnerships accelerate much faster than expected. The bullish believers. On the other side, you have crypto-native analysts, influencers, and YouTubers who are far more optimistic. Their argument is simple: tokenization of real-world assets, RWAs, is inevitable, and Hedera is one of the few networks actually positioned to lead that wave. Some of them openly compare HBAR today to where Ethereum was in 2016 to 2017, undervalued, underestimated, but with all the building blocks for exponential growth. These bullish forecasts often call for $1 to $2 HBAR within this cycle, with some going even further into the moon math territory of $5 or even $10 long-term. Their reasoning? If Hedera manages to secure a major role in tokenizing trillions of dollars of financial assets, even a small slice of that market would translate into enormous demand for HBAR. They point to use cases already live, like carbon markets, micropayments, and fintech pilots, as proof that Hedera isn't just a white-paper dream but a functioning network with enterprise-grade adoption. The short-term speculators. Then you have the traders, the ones who live on charts, technical indicators, and crypto Twitter narratives. For them, HBAR is less about the 10-year horizon and more about the next breakout zone. Many of these short-term analysts argue that BAR's biggest resistance sits between 12 cents and 15 cents, and if it clears that range with volume, the next stop could quickly be 25 cents to 30 cents. They're not promising long-term sustainability, but they're watching liquidity inflows and momentum, especially whenever Hedera announces new council members or partnerships. It's also worth noting how narratives influence these predictions. When Google joined the council, price chatter spiked. When tokenization projects hit the news, suddenly HBAR to $1 trends. Traders know that partnerships move markets in crypto, often more than raw adoption numbers do. That's why many of them are betting on event-driven pumps throughout 2025 and beyond. The common thread. Despite their differences, one thread ties all of these predictions together. HBAR is widely seen as undervalued relative to its fundamentals. Even the conservative forecasts don't argue that Hedera is weak. They simply argue it may take longer for adoption to reflect in price. The bullish camp believes the world will wake up to Hedera's position sooner than later. Another commonality? Most analysts expect steady, not explosive, growth in the short term. Unlike meme coins that skyrocket overnight, HBAR is viewed more as a long-play infrastructure bet, the kind of asset that compounds value as enterprises slowly migrate real-world functions onto decentralized rails. Long-term scenarios. So how high could HBAR realistically go? Let's consider 3 scenarios. The conservative path. Hedera grows adoption steadily, but token unlocks and modest enterprise traction keep price capped. Result. HBAR hovers between 25 cents and 50 cents for the next 2 to 3 years. The breakout path. Tokenization gains global momentum, and Hedera captures a meaningful slice. Partnerships with banks, governments, or fintech giants turn into actual transaction volume. Result. HBAR pushes past $1, possibly toward $2 to $3 this cycle. The exponential path. Hedera not only scales adoption but becomes the default infrastructure for tokenized finance, sustainability markets, and identity solutions. Result. HBAR enters the multi-dollar range, $5 to $10 plus, over the long horizon, though this assumes near-perfect execution. Most analysts fall somewhere between the first 2 scenarios. Very few dismiss Hedera outright, and that alone says something because in crypto, countless projects get ignored or written off. HBAR is not one of them. The investor takeaway. At the end of the day, analyst predictions are just that, predictions. Markets are messy, and crypto even more so. But the sheer range of HBAR forecasts, from conservative 2x potential to wild 20x moonshots, reflects the unique mix of enterprise credibility and retail curiosity surrounding this project. For investors, the real question isn't will HBAR hit $10? But, what role do I want HBAR to play in my portfolio? If you believe in the tokenization thesis and Hedera's governance model, holding HBAR is essentially a bet on the future of regulated, enterprise-friendly Web3. If you're a short-term trader, you're betting on volatility around announcements. Either way, the attention from both conservative analysts and bold influencers suggests BAR's story is just getting started. When we talk about what could push HBAR higher, it's not just about charts or tokenomics. It's about real-world catalysts, the moments, partnerships, and breakthroughs that could flip the narrative and drive serious demand. Hedera has been laying bricks quietly for years, but in 2025, the pieces are aligning in ways that could finally put this network front and center. Let's unpack the biggest catalysts that matter. The tokenization of real-world assets, RWAs. This is the megatrend, the one every blockchain project is trying to tap into. Banks, asset managers, and fintechs all agree. The future of finance is digital, and tokenization is the bridge. But here's the kicker. Not every chain is built to handle regulated assets. Hedera is. Hedera's governance model, with council members like Google, IBM, Standard Bank, and others, makes it far more appealing to institutions than a permissionless free-for-all chain. If Franklin Templeton, BlackRock, or other asset managers begin scaling tokenized bonds, equities, or real estate on Hedera, that's an immediate value driver. Think about it. Even a sliver of trillions in tokenized assets would require infrastructure that's stable, secure, and enterprise-friendly. That's Hedera's sweet spot. Government and central bank adoption. CBDCs, central bank digital currencies, are no longer a maybe. Countries across Africa, Asia, and Europe are actively testing or rolling them out. Hedera has already been involved in pilots, and it's well-positioned to be part of the next wave. Governments need networks that balance decentralization with governance, speed with compliance. That's what the Hedera Hashgraph consensus delivers. Imagine if even one major central bank or regional consortium launches a CBDC on Hedera. That would flip the demand switch overnight, pushing HBAR far beyond its current trading ranges. It wouldn't just be another partnership headline, it would be real volume, millions of transactions, and the kind of credibility most crypto projects can only dream of. Sustainable finance and carbon markets. This one often flies under the radar, but Hedera is carving out a niche as the chain for sustainability. Tokenized carbon credits, renewable energy certificates, and ESG tracking are all being built on Hedera today. In a world where climate accountability is becoming non-negotiable, having blockchain infrastructure that can actually deliver verifiable, low-cost records is a big deal. If these sustainability markets gain traction, and governments or corporations adopt them at scale, Hedera could ride that wave. It wouldn't just be about speculation. It would be about providing real value in a sector that touches everything from airlines to agriculture. And because HBAR fuels the network, demand would naturally rise alongside adoption. Enterprise Council expansion. The Hedera Governing Council has always been one of its crown jewels. No other network has a roster of Fortune 500 companies actively running its nodes and shaping its governance. Every time Hedera adds a new council member, the market pays attention. But here's where it gets interesting. We're entering a stage where enterprises are no longer just experimenting, they're moving into production. If a council member like Google, Boeing, or Deutsche Telekom launches a mainstream product using Hedera, that's not just governance credibility, that's usage. And usage equals transactions, and transactions mean HBAR demand. Crypto market cycles and liquidity inflows. Let's not ignore the elephant in the room, macro cycles. Crypto runs in waves, and Hedera will rise with the tide. If Bitcoin ETFs bring in fresh institutional money, if Ethereum continues to grow as a DeFi backbone, then projects like Hedera that offer enterprise-ready solutions will see inflows. The difference is, unlike meme coins or hype-driven tokens, HBAR has fundamentals that can sustain its growth. In other words, when the bull cycle matures, investors will ask, what projects have real adoption, real use cases, and institutional backing? Hedera will be on that shortlist. That recognition alone could catapult HBAR into a new pricing tier. Developer ecosystem growth. For all the enterprise talk, let's not forget the builders. Developers bring the creativity and applications that drive grassroots adoption. In 2025, Hedera is starting to see more activity in DeFi, NFTs, and Web3 applications. Micropayments, gaming, and creator tools are slowly emerging, and those use cases could scale fast. If Hedera's developer ecosystem explodes with fresh apps, we could see a feedback loop. More users, more transactions, more visibility, more developers. That cycle is how Ethereum and Solana hit their stride. Hedera doesn't need to dominate retail activity to succeed, but having a thriving ecosystem would amplify everything else. Strategic partnerships. This is where things get really exciting. Crypto thrives on partnerships, and Hedera has shown a knack for landing meaningful ones. From banks to NGOs to corporates, Each new deal expands Hedera's reach. What if Hedera partners with a major payment provider? Or becomes the back-end for global remittance corridors? Or wins a big-ticket deal with a multinational enterprise rolling out tokenization to millions of customers? These big bang partnerships are the kind of catalysts that can spark both short-term price action and long-term adoption. And given Hedera's council-driven model, the pipeline for these opportunities is always open. Regulatory clarity. Last but not least, regulation. Love it or hate it, regulatory clarity could be a massive catalyst for Hedera. Unlike anonymous, Wild West blockchains, Hedera is designed with compliance in mind. It doesn't shy away from working with governments, enterprises, or regulators. That alignment could pay off big when jurisdictions finally put firm guardrails around tokenization, DeFi, and enterprise blockchain. When regulation favors projects that can prove accountability and governance, Hedera will look like a first-choice option. And that could shift capital, partnerships, and adoption toward HBAR in a way we haven't seen before. The bigger picture. Put all these catalysts together, and you start to see why so many analysts, influencers, and investors are cautiously optimistic, if not outright bullish, on BAR's future. Hedera isn't just a speculative play. It's a bet on the infrastructure for tokenized economies, government-backed digital assets, and sustainable finance. That's a powerful combination. The truth is, no single catalyst will do it alone. But when you combine enterprise partnerships, regulatory alignment, tokenization adoption, and market cycles, the momentum becomes undeniable. And in crypto, momentum is everything. So, after walking through Hedera's fundamentals, the analysts' predictions, and the catalysts that could push HBAR higher, what's the takeaway? The truth is, Hedera is sitting in a unique position in the crypto landscape. It's not chasing hype. It's not leaning on memes or speculative mania. Instead, it's quietly building a foundation for real-world adoption, tokenization, CBDCs, sustainability, enterprise solutions, the kinds of things that governments, corporations, and institutions actually care about. That doesn't mean the ride is going to be smooth. We've seen this before. Crypto narratives move in cycles. One moment, the spotlight is on meme coins. The next, it's DeFi. Then NFTs. But underneath all that noise, the infrastructure plays, the projects actually powering the pipes of the new financial system, are the ones that tend to stick around. And Hedera is squarely in that camp. If you're an investor, the question isn't whether HBAR is going to pump tomorrow or next week. The real question is, do you believe in the thesis that tokenization, enterprise adoption, and regulated blockchain infrastructure are going to be major parts of the future economy? If your answer is yes, then HBAR is a project you can't ignore. Because here's the thing, when adoption comes, it often looks slow, and then suddenly fast. Think about how cloud computing went from fringe to everywhere, or how mobile payments went from a novelty to a standard. Hedera is planting seeds in those kinds of transformational areas right now. And if those seeds sprout, demand for HBAR isn't just likely, it's inevitable. Of course, you've got to manage expectations. Could HBAR hit $1, $2, or even $5 in the coming years? Absolutely, the catalysts are there. Could it also take longer than people expect because enterprise adoption moves at a slower pace? Definitely. That's why patience is part of the game here. But one thing is clear, Hedera isn't a project to sleep on. The council members, the partnerships, the enterprise use cases, they're all pointing toward a future where HBAR is more than just another token in the sea of crypto assets. It's positioning itself as the infrastructure layer for the tokenized economy of tomorrow. So, if you've been watching from the sidelines, maybe it's time to lean in a little closer. Do your research, check out the use cases, follow the partnerships, and decide for yourself where HBAR fits into your strategy. Because whether you're a long-term believer or just someone curious about where this space is heading, one thing's for sure, Hedera is building something big, and when the world finally catches on, you're going to want to say you saw it coming. And hey, if you've been finding value in this breakdown, don't just keep it to yourself. Share it with a fellow crypto nerd, drop your own HBAR price target in the comments, and let's keep this conversation going. Because the story of Hedera isn't written yet, and the next chapters are going to be fascinating.